right, guys, what is going on? What is good? What is good? It is Friday, April 5th, our last stream of the week. We got a little over 20 people on. Hopefully we can get a little bit more than that. Hopefully we can get more, because we got a lot of stuff to cover, man. We got a lot of stuff to cover today. All right, but we should be good. Can you guys give me a sound check real quick? Can you drop a 1 if you guys can see and hear? If you can see and hear, drop a 1 for me, please. And might as well drop a like on the stream too. Might as well do that too. What's good, Felix, Nicole, Senior Diego, Lucas, G, Naruto, Nikki, Nina, OG, Lazar, what's good? La Cristo Iberneth, Pop. All right. Thank you, everyone, for the ones as well. What's good, Steve J, Yuso. A couple new faces in here today. So, oh my God, yeah, we got a lot. We got a lot to cover today. So I meant to cover one of the students' questions in the Discord about pound yen. I was going to cover that in the market review. I did the market review and then totally forgot about it. So I'll do it here. Was good, Capitalist. Was good, 2020. And oh, it looks like we're getting a little bit of a sell-off here on this beautiful 5-minute time frame. Okay, perfect. Yeah, Willow, look at that. Congratulations. Got that gold sniper, man. I told you it was going to be soon. I wonder if Vadu got his as well. Yeah, Ibernit, the gold sniper is 1 year. Is a full 1 year on this channel. And yeah. So Vadu and Willow and I think a couple others were up next, so clearly he got his. Oh, Vadu was gold on Wednesday? Oh, thank you for that, Naruto. Hey, there he is. Look at that gold sniper, man. Looks good. Looks crispy. All right, so I'm wondering if we should clip these or not. I might as well. I might as well clip these. Actually, you know what? We'll go down here. They asked about something on here, right? Or am I tripping? It was something about lows and highs, or maybe it was a small time frame. Was it GJ or Euro Yen? Shit, now I can't remember. What's good, Jason? I could have sworn it was GJ, right? I need to go look. I should have looked in the Discord before we started. Or was this like the other night? Now I don't remember at all. Yeah. Let me look at this Discord real quick. There's a small time frame mitigation model. The person was bearish. Yeah, I feel like you're right. Yeah. They were bearish and it went higher. Yeah. Okay. Now I see it now. From the 4th. I want to say that was right in here. Okay, that's why I couldn't see it. All right. There we go. Okay. So those highs and then these lows. And then I think they were looking at this right here. Yeah. Okay, there we go. All right. So whenever you have a bias, bullish, bearish, whatever, and you get it wrong, meaning they were looking for shorts to go lower and the market flies higher, it exponentially trades higher. So something was wrong about that. So what we need to do is top-down analysis, okay? Not just with GJ, right? GBP, JPY. But if you're going to trade this, I would suggest looking at Euro Yen as well. Okay, actually, we need to clip this now. Okay, so again, when you're looking at GJ, I believe a person should also look at EJ as well, right? Because they both have yen as the secondary currency, but it's because British pound and euro, that correlation, right? So it would behoove of you to look at both. All right, so that's number one. Number two, top-down analysis. That is one of the keys to not losing as much. All right, I can't promise, to win more, but I can at least tell you that I'm confident that you would lose less often by using the top-down analysis approach or the triple screen. There's a reason the triple screen is in that 90-day PDF, which is free for everybody, right? Your first 90 days in the SMS community. It's a free PDF. The videos are free. And one of them is the triple screen. There's a reason for that. Well, why is that? Because you need top-down analysis. What's happening here on the daily time frame? Well, over the last couple of weeks, it's been a general consolidation. That's usually not fun. In a little bit more macro perspective, we need to look back into March. All right. Now we're going to do that for GJ as well as EJ. Okay. Even though they kind of both look janky. I want to say EJ has a little bit more clear. I don't know how to put this. I think the price action is cleaner, a little bit more cleaner on EJ than it is on GJ. Mitigation and imbalance confluence on daily. Well, yeah, I mean, I posted this in the Discord already, but when we look for a mitigation, okay, the high or the low that has been set is more likely to hold if it's reacting from something on the higher time frame. Okay? Doesn't matter if it's a 5 minute, 1 minute, a weekly or monthly, doesn't matter. Okay? As long as it's doing something on the higher time frame. Okay. So what we have here, there's actually a couple of different things I want to show you. This March 11th, March 12th is very important. Okay. Now we can always go look at mitigations and imbalances and whatever, but you need to look at it a little bit more in depth than that. So what I'm saying is, in the traditional sense of a mitigation, we all should know what that looks like. I'm going to give you a bullish example. So that's what I'm going to draw for you real quick. When we have a low, a high, a lower low, and then the higher high, something like that, right? Everyone looks for this, right? That's the mitigation essentially. And that's usually the first thing that everybody's eyes goes to. But every piece of this puzzle is important, especially the way that we created the low. And for those of you that have the mitigation model, you understand that there is something down here. Something. I don't know what it is. It could be a higher time frame imbalance. It could be a higher time frame mitigation, higher time frame low. Maybe last quarter's low, or maybe London's low. Like, it's got to be something. Can't just be nothing. That is highly, highly important, because that's how we understand that the low has been established. Once we know, or have at least have a strong opinion that the low has been set, we're starting to look for, right, long positions. So although the lowest low in this range from February 1st to February 26th, basically the month of February, we understand again that the lowest low is down here, 158.08. Okay, cool. But in between that, you do have some other short-term lows. Okay, you have one short-term low at 160.38. That would also be discount liquidity. Eberness. That's why I'm trying to point out to you here. It doesn't have to go all the way down to 158. Okay, it doesn't have to go 200-300 pips on a daily time frame just to grab liquidity down here. It doesn't have to do that. But it does grab internal range liquidity here. Now, what is this line up here at I don't know what that is. 160.56. That, my friends, actually is something on the weekly. Okay. It's this. Okay. Before we get into everything up here, there's this gap from January 22nd and January 29th candle on the weekly time frame. There's a gap right there. And then this is that down candle, even though it has a long wick, weekly time frame, fractal low as well. Okay. So basically the down candle and the fill of this gap is right here. Okay. So you know what we can do just to give you a little bit more juice? And I know most of you aren't going to do this. Not that I'm trying to talk shit, but I've been doing this for 10 years. Okay. I fucking know this shit. A lot of you aren't going to do this, even though I think you should. That you should label. Weekly, like weekly down candle, fucking weekly gap fill, whatever. Okay, that you need to know. So now we have more confluence. We have confluence of what? That weekly down candle, as well as the 160.38 level, which is just an internal range liquidity low, discount low. Okay. What does that mean, chat? What do I mean by like discount liquidity? Look at the range. Here's your high, or excuse me, here's your low. Clearly, I haven't woken up yet. English. From the low up to the high, where's your fair value level? Your 50%. It's right there. 160.90. That's your fair value level. So discount liquidity is going to be liquidity below a low that happens to be below 50% of the defined range. All right. So that's there. And I'm saying all this, okay, because it might not make sense. John, hold on. We're talking about a GJ 5-minute time frame, but we're looking at EJ on a daily, weekly. Like, what the fuck? Right. Top-down analysis, understanding order flow, okay? Because now when we go a little bit further into history, more recent history, because we're in April, okay? So what happens right here? All right, take a look. Low, high, lower low, and actually this probably should be this. This should be this candle. I don't know why I labeled that one. It should be this one. Okay. Because to me, this low being swept, that's the highest up close candle. Okay. So there's that. Imbalance here. And now we have both. We have confluence of both that imbalance from March 19th daily candle and then March 18th high and March 20th low. You see that? So then now what do you see taking place? On April 2nd, which was Monday. I lied, that was Tuesday. Tuesday. We trade to the lower end of that. And then we trade off of it. So what are we respecting here? We're respecting this February 26th daily candle. And then what happens on April 3rd? We trade up and off of it. Right? So we're trading away from it. If we look at GJ, it doesn't really have the same exact phenomenon here, but it still does have this imbalance, in which I know price spends a absolutely bonkers amount of time in there. But focus on the lower end of this range here. Okay, actually we'll make it a thicker line, so we understand that maybe the thicker lines will be higher time frame. Okay. So with those highs here and these lows here, okay, do you see why that setup did not work? How do you fucking... Yeah. Okay. So do you see why it took small time frame liquidity? Sure. But it doesn't reverse to go lower, right? It continued higher a little bit more. But do you see why? Look what that daily time frame is coming off of. The low end of this imbalance here. So as of now, as of today's candle, sure, you know, it again ran higher, probably stopped you out. Then it went lower, and then today's candle reached into this down candle here, fractal low as well, imbalance here, and this imbalance is within the larger imbalance here, in which now, you know, obviously hindsight, but from here we are trading higher, right, above these highs here. So that movement, you're basically trading counter. I don't want to say trend because we don't like look at those things, but it's the daily time frame that's trading higher, and then you're going against that based on really small time frame liquidity. That's why those setups, even though they look good, don't work every time. OC took that GJ buy last night. Oh, nice. Probably up like a cool 50, 60 pips, 70 pips or something. That's nice. So that's GJ. Okay. And then what you should do as well is you should see if that same setup that you were looking for shorts on was on EJ as well. And I don't think it was. Not until way later, until we made these triple highs up here. The way we did that, high, higher high, third higher high, traded lower, very, very shallow retracement. And then you already know what happened yesterday. We had a lot of volatility yesterday, or Thursday. Thursday was yesterday, tripping. And we sold off. So in order to wrap this up, so we don't make this clip too long, when you're trading pound yen, GBP, JPY, I would advise to also look at Euro JPY, see if there's any alignment or if there's any strength or weakness there. Now, since you're trading those cross pairs, you need to take it a little bit further and go into Euro USD and GBP USD and the cross pair Euro GBP. So that way you can define what's stronger, Euro or British pound, or what's weaker, Euro or British pound. And then you also have to look at dollar index, so you get the inversion there as well, as far as what the dollar index is doing. So this is why cross pairs are a bitch, because you have to do a lot more analysis to get to high probability. So if that makes sense, drop a 2 for me and drop a like on the stream if you got some value so far. Now we have 50 people here at the end of the first lesson, at least. All right. So you got to look at all that stuff, and then you got to do your top-down analysis. Don't forget about the triple screen, my friend. It's not difficult. All you got to do is come up here. There's a square right next to it's up there. You'll see it. There's a square at the top right of your trading view. The easiest one to me is the one on the third row all the way to the right. There it is. Boom. 2 clicks of a button and you got your triple screen up. Just make sure that I might have the time frame. I might have this shit all fucked up. All right, anyway, so the bottom right, you can make your daily. So that way you got your daily back here, so you can understand what this level is. You can scrunch it up if it takes up too much room. You could have your daily down here, and then you could have, I don't know, a 1 hour or whatever time frame you want, and then have your 5-minute execution time frame over here. It's such a simple concept that will save you from losing more trades than necessary. Okay? And that'll be the end of that first clip. All right. So today we're also supposed to talk about options, because I told you I would do that. All right. Yeah, I guess we can do that. Probably my least favorite subject, but we can do it. So let me give you some notes at least, and then we'll go from there. So when it comes to options, okay, I'm looking at traditionally SPY, triple Qs, Dow Jones. DJ just hit TP. Nice. Very, very nice. Why was yesterday so volatile? We had no special news because I was bearish from the beginning of the week. I control these fucking markets, Lucas. I'm just fucking around. Or am I? No. Again, welcome back. We talked about these highs, man. You don't need the excuse. I tell you the excuse. We had a divergence up here between what? ES trading higher, Dow Jones was trading higher, and then what was Nasdaq doing? Not trading higher. I gave that to you from the fucking jump, Monday and Tuesday. So you saw everybody scrambling around. Oh my God, what happened? What happened? The fuck you mean what happened? What we expected. These people don't know shit, bro. And I'm not trying to let my ego slip. It's morning time for me. I just got my vision back yesterday. I'm good to go. I'm fucking hyped, dude. It's like, what do you mean what happened? It's price. That's what happened. But anyway, let me calm down for a minute. Let me come back. Go back to reality for a second. Let's talk about options. When it comes to options, okay, these are kind of the things I look for. And I'll give you some notes. Because honestly, I've done a couple of videos on options already, and I highly suggest to watch those. But let me at least give you a brief overview. The reason, all right, the reason I like to trade options is for these reasons. Number one, I'm looking for low risk, high reward setups. That's no matter what asset class. Okay, that's universal. All right. Doesn't matter what asset class. I'm looking for low risk, high reward setups. Now, in options, the risk is predefined. Well, in some of them, they're not. But what I look for is basically OTM calls or OTM puts. All right. That's what I'm looking for. OTM calls or OTM puts. Now, OTM means out of the money. It means out of the money. The reason that these options are cheap, relative, is because you're basically saying, let me give you an example. All right, don't trade this because you're going to lose money if you do this. But let's just say, I think the market is going to make a new high. 524.61. Maybe I think by Friday of next week, it'll be above 524.61. So you would basically go, all right, the contracts are usually based around whole numbers. So it would be, the strike price would basically be 524 or maybe 525. Usually. So, one of those two contracts. So what I would do is say, all right, I'm going to purchase a contract or multiple contracts at the 524 level. Okay. By the time, what did I say, Friday of next week? That's the 12th. So basically Friday, I think it's right at the open or close to it. I usually don't hold to expiry, but I'm basically saying, all right, the market is going to do what? At some point, trade higher, and I'll close my position and make money. Again, the reason that the options are cheap is because the market has to basically go that distance by the time that options contract, expires in order to make money versus something that's like down here. I can buy a contract at the 514 price level saying that, yeah, it'll be above 514 by Friday of next week. That contract is going to be mad expensive because you're already in the money by far relative. You know, you're up $5, you know, on this ETF. Does that make sense? So it's going to be a lot more expensive, and the risk is not going to outweigh the reward on that. So what I mean is, let's say you think it's going to long. You could say, okay, this contract, let's just say is $25. So this contract down here is probably going to be like 150 or something like that. It'll be exponentially more expensive because it's in the money. Now, what'll happen is, let's say we bought it today. Something happened over the weekend and we gap higher. So these $25 contracts are cheap because it's not there. Once it gets there, this $25 contract now becomes like $150, $200. You know, something to that effect. So you're risking $25 because if that expires worthless, you lose the whole thing. That's it. So if you bought 2 contracts at $25 a piece, right, you basically put in $50. And if it goes down and you hold it to expiry, you lose it all. Okay? So when it trades higher and you basically get that premium, especially if it does it fast, you make money. Okay? So I'm looking for, did I delete the text already? I'm looking for low risk, high reward setups. I typically trade OTM calls or puts because it offers a nice risk to reward. All right. And again, you can do this with stocks and all that, but it's the pricing of the options is going to be based on the price of the stock and other factors like the Greeks and shit, which I don't know all about. But if I want to keep it simple, I typically just trade SPY, the triple Qs, or the Dow Jones. I usually don't trade Dow. It's usually going to be triple Qs or SPY. All right. Here's a key. One of the keys is volatility, which is another fancy word for movement, like fast movement. All right. So I'll give you an example. You know what we saw yesterday on Thursday? What did we see? A massive sell-off in the PM session. Thursday was very volatile to the downside. So anybody who was short prior to that, they killed it going lower because it was so fast. It was exponential. It was aggressive. Now pause here for a minute. Well, damn. All right, John, how do I get those? Go back and watch that stream we did a couple weeks ago. The trade that everybody wants. That's the second leg of accumulation or the second leg of distribution. Is it all starting to connect for you now? All the streams are interconnected. All the concepts are interconnected, like a spider web. You might not think dollar has to do anything with the stock market, but there's a connection. It's all interconnected. And the concepts will not... You can find the setup where you have a conflicting bias. Maybe you have equal highs and equal lows. In that instance, things are not going to align. But there's a reason why the mitigation model is the way it is. Other models are the way they are. Because you're getting in alignment with price, with order flow. So that volatility here, that was part of essentially the finesse. Right? Because we talked about that. On ES, we talked about how Thursday of last week on the daily, this made a higher high and the other indices didn't, right? So we expected what? Lower pricing. So I didn't short this. I did on demo on Thursday or Wednesday. One of the fucking days in here. And it sold off very, very aggressively, right? That is what is going to exponentially make you a lot of money if you get it right. And that was the last thing, which I said a minute ago. What chart were we just on? This one. Okay. And that was the last point. And I jumped ahead of myself. I said this earlier. What I'm looking for is a strike price that's close to the equal highs or the lows or the target. Okay. So there's a few things that you got to take into consideration. The bias is one. Are you going to long or short? Then it's going to be, I'll leave this up here for a minute. You need to decide if you're going to long or short, right? Put options to go lower, call options to go higher. Then you got to pick your strike price, which means what price do you think it's going to trade to and above, really, because you could pick any of them. If you wanted, okay, what the options chain is going to do, it's going to offer options pretty much at every level, 520, 521, 522, you know, so on and so forth. Okay. And I know it's not exact, but I'm just trying to be a little bit more thorough for you. Okay. So the further you go away, meaning like the further prices away from your strike price, the cheaper it's going to be. So the options up here could be super cheap, fucking 20, 30 bucks, 40 bucks or something. And if it really goes your direction like this, that 40 per contract turns into like 200, 300 a contract. It's nasty. I mean, you literally can 5x, 10x like that trade. So think about that. If your full risk is 1% and you 5x, that's a 5% gain. You see what I mean? And like, that's the kind of things I go for. Now, sometimes I'm wrong, or maybe it goes to my target, but it doesn't do it with enough volatility. So instead of making 5x, I make like 2 or 3. Okay, I'm still going to take it. You know, it's still going to be profitable. But that's pretty much the basics of what I'm looking for. So let me give you a better example of like, as far as like an actual trade goes. It's been a fucking minute since I traded any stock options in here. All right, let's just do this. You remember the other day when I was saying, hey, I think, you know, we could trade higher, but I'm not longing this. Because, you know, this could be a potential mitigation. Actually, that was on Wednesday's open, but it's fine. So if I think, hey, you know what? If price trades through this and back into it, I think this could be a mitigation to go higher. And this gap fills at 522. You could say, all right, I'll buy it here and I'll hold for 1 or 2 days and I'm looking for 522. So you go, okay, I'll buy it here. Not sure what the price, it could be 20, 30, 40, 50 bucks. I don't know. And if price gets here, if it gets to that low, I'll just close my option. So I might say, let's say 100 bucks. But if it goes down here, it might be like 60, 70 bucks. Okay, cool. I'll just stop. I'll get stopped out, lose 30, 40 bucks a contract. Not a big deal. So you're in profit by the end of the day, a little bit. Next day opens and trades higher. So if you had held that, you know, if it's going your direction, that's when you're going to make money, especially like here, that 9 a.m. candle, how it trades higher, like that right there is a good TP. Right then and there. That like 5-minute candle right there, that's good. That's what you want to see. Because you're going to get the difference in price, obviously, but you're going to get a volatility premium as well. It basically, it's like a supercharged, it's beneficial. All right. So that's probably not the greatest stream I've ever done on on options, but that is the one, that's the one thing that I look for. Okay, I'm looking for basically that. Okay, low risk, high reward setups, out of the money on the indices, you know, second leg accumulation, second leg distribution, something to that effect. And I'm targeting equal highs, equal lows, and I'm usually going to go with a strike price. This will be the last thing I'll say, and then we'll have one more conversation before this weekend. I typically think it's better. Let's say the high is at 524.61, and you go, okay, well, I want to trade an option contract, but I don't know if I should trade 524 or 525. You know, what should I do? Which one should I pick? What I would usually do is the one that's at 524. Because what'll happen is if this goes higher, if it's going to run liquidity, it's going to do it very fast and aggressively. And when you get volatility, that's good. You get your price movement, that's good. But you also have it to where it's going, it went from out of the money to in the money. And the further it goes in the money, like deeper in the money contracts, it's just exponentially better. So it would be easier, I think, to have the strike price that is just below equal highs or low resistant highs or something like that. You guys with me? Somebody from the Fed said that interest rates might stay higher for longer. I saw a tweet somewhere a couple of minutes before the sell-off. Well, yeah, people are always going to justify why the market did what it did. Oh, the market. Oh, Jerome Powell. Oh, whatever. It's like, bro, we were bearish on Monday, Tuesday, and Wednesday. And everybody's surprised we got a sell-off on Thursday. Why are you surprised? People always look for justifications, bro. The way the human brain works, I might still be recording this. Let me go ahead and clip that. The way the human brain works, bro, is we look for patterns when patterns aren't even there. That's why people look at clouds and go, oh, that looks like a tricycle. Or, you know, that looks like a bird. It's a fucking cloud, bro. But your brain is trying to see things that it's already saw before. We, as people, as humans, we look for why things happen the way they happen. That's why so many people are curious about a lot of shit. Or that's why people gossip about other people, because it's intriguing and we feel better about ourselves when we talk shit about other people. Oh, look at this person. Look at this cheater, right? I pride myself on not being a cheater, right? And like, it feels good. We like to look for reasons. Why did the market sell off? I don't understand. What happened? You can look for all types of justification. Well, there's more sellers than buyers. Oh, it hit a supply zone. Oh, it fucking, somebody tweeted that interest rates are going to do this or that. Bro, skip all that bullshit and stick to the price action. How else do you get bearish 3 days before a sell-off? How? Come on. You don't need justification. You need price. You need time, price, and context. You've had the 3 keys, my friend. You've had the keys up here staring at you in the fucking face this whole time. Rock Coomer in the building. What's good, Rock? Everybody say hello. It's been a minute. But yeah, we got Rock on here. Welcome, brother. Why do you trade options sometimes when you can make easier and more money with normal futures trading? If the futures, if it's too much, like if the stop loss is too large, but I still want to take the trade, I'll go into options. That's why. Miss British Pound at the bottom. You think it will come back next week? I don't know. I don't think so. I think we'll probably trade higher for Euro and British Pound. I could be wrong. That's always on the table. But the reason for that, earlier this week, when I screenshotted down here, I don't know if the arrow is still there. But remember we talked about this earlier this week, which was the low of the week pretty much. I didn't know if it was going to be or not. But this area down in here was 100 pips ago. If you start, again, just like I said earlier, if you start on the daily, okay, look at the low of February 14th and look at the low of April 2nd. Look at this low here and look at this low here. Let me delete everything so you guys can see that. Here's the low. Here's a higher low. Right? All right. Well, if Euro had a higher low, dollar should have a lower high. Does it have a lower high? No. It has a higher high. So dollar is higher and the euro is higher. But I thought the dollar was the opposite of euro. I thought the euro was opposite of dollar. You're a fucking goober if that's what you thought. It's not that bar for bar. It's not that lockstep, bro. There's breaks in correlation. And when you see that, that's how you know with a high probability, if it's got something on the upside, it's going to reach for that. And we see higher pricing. Look at today. Yesterday was kind of that was a run on March 26 high. But then look at today. We traded lower only into what? The most recent imbalance. Right here. We traded right into that and then off of it. That doesn't look bearish to me. Or did you say bullish? I'm over here lost in the fucking sauce. Oh, yeah, okay. Yeah, if you did, I mean, fuck, I don't know if it's going to trade all the way back to this low or this low, especially for British pound. I don't know. We do have equal lows at the 125.40 level, but look at this. I don't know. This doesn't look good. If I was short, I'd be mad as a bitch right now. Because it reached all the way down here and then came all the way back up today. That's usually not a bearish signature in price. I asked on one of your videos. Oh. I don't know if I saw your comment or not. Have you changed the way you trade since the book you published? So that book was written 4 years ago or 3 years ago. Or 4 years? Fuck, I don't know. It's been a few years, but there's a few things in there that I didn't write about. I didn't write about shit that wasn't mine. Like some of the things I've been teaching you the last couple years. But I use what I gave you. That's in there. Rock said he's getting fat in Spain. Definitely not, though. My boy is biking out the ass. Before London session. Yeah, Rock's still doing those sets. Bro, how long you been doing those sessions? It's been like 5-6 years? Jesus. Fun fact, Rock was the first educator that allowed me to be on his channel. I was a guest for like 2 fucking years before I got mine. But we won't get into what happened after that, but just know that we're here on YouTube now, and that's the short and simple version. But yes, Rock was the first one to put me on. So if you guys ever found me because of IM, you know, Rock played a big part in that. So yeah, they were good days, man. We stayed up. Well, I stayed up like all night doing that shit for London. Really good times. Rock remembers orange juice and coffee. Both of those trades will never be duplicated. Never. None of us will ever find a trade bigger than coffee or orange juice in the commodities market. In crypto, yeah, maybe. In stocks, yeah, maybe. But there's no way we will ever outdo orange juice and coffee again. It's not going to happen. Those moves were literally historic. Anyway, when you analyze before trading, do you always go from the daily to the 5-minute time frame and mark all high time frame imbalances? Or do you only look for consolidation highs and lows on a 5-minute chart mitigation there? So best way to do it, my friend, is just like I showed you. Going to the daily time frame. Right. Well, monthly, weekly, daily. I mean, if you don't want to go to the monthly, I'm not gonna fault you for that. But I would say I would check the monthly at least at the end of every month. Like on the 1st or 2nd of every month, probably go to the monthly just to see where you're at. Like say back in July of last year, August 1st, you could look at this and go, oh man, what'd the dollar do? Well, we took some lows and we filled in an imbalance from forever ago. Oh, okay, well, you've seen that before. Lows and imbalance with a long wick like that. That typically means bullish after that. Next candle entry, right? Yeah, go look at the Nasdaq 15-minute time frame you fuckers didn't screenshot the other week. Yeah, I'm still going to rag on you for that. Next candle entry, boom. So I would check the monthly at least once a month. But yeah, weekly and daily, you don't want to skip that. Okay? Because you can see stuff that otherwise you would not see on a 5-minute time frame, like this reaccumulation in here, this gap in here, that gap below a low in here. And when you have that on dollar, that's going to translate into other, foreign currencies. I didn't have a bias today. Today was I'm going to sleep in because it's Friday and news is way early in the morning. So I have no bias. If anything, I wanted higher pricing so I could sell stock that I don't want to hold. And now that we're higher, I don't know if I'm going to let it go or not. So I really had no bias. But I don't know what's next, bro. It's the beginning of Q2. We do have some lows at 505 for SPY. Maybe the stock market does sell off. I don't know. I don't know. I mean, look, I don't want to brag, but the positions are so far into profit that it's really not that big of a deal. Because some of these trades have been running for over a year. So a pullback for 2 weeks is not going to be the end of the world. But I just don't know. All right, we have one more thing and then we're going to hop off here. And this I'm going to clip as well, because I want to share something with you. I put this in the Discord, but I want to share it publicly as well. And I don't know if you guys read it or not. But let me put this in here. Okay. This won't take that long. but I want to give you this. So I forgot who it was, but one of you asked, how does a Stoic deal with being sick? Now, recently, I wasn't sick, but I did lose like half the vision in my left eye. Something hit me, scratched my shit. Couldn't really see much out of it. It was horrible. That first night, no, dude. I laid in bed for like 5 hours. Then I went to sleep. It was bad. And that was Friday of last week. That was a week ago today. I mean, I just got my vision back like yesterday. So, although I wasn't sick, I would still say somewhat of a hardship, right? A little bit of a challenge. So, I posted this in the Discord on the 1st. And I had screenshotted or took a photo of one of the pages in a book. It's the Oxford World Classics version of Discourses and Selected Writings by Epictetus near the end. And so it says, disease is an impediment to the body, but not to choice, unless choice wills it to be so. Lameness is an impediment to the leg, but not to choice. And tell yourself the same with regard to everything that happens to you, for you'll find that it acts as an impediment to something else, but not to yourself. There was another portion of what we have quoted from Epictetus, where he said, you could throw me in jail, you could bind me to chains. He's like, you could lock my body. You can make me a slave, but you can never like take my mind. So if you guys don't know this, Epictetus was somebody who had a broken leg. He walked, basically with a cane, I think, for probably the majority of his life. That's why if you look up Epictetus, it's that picture of him at a desk with a cane because he had a broken leg. So his whole thing was, I'm not a slave because my mind is always free no matter where I'm at. So he's basically saying, in layman's terms, you have a choice. And so I wrote, Epictetus would tell us, image above, that we choose how to respond to what happens to us. We don't control what happens to us. It's basic Stoic philosophy fundamental. So then, since I'm reading about Marcus Aurelius in Donald Robertson's newest book, Marcus Aurelius, Stoic Emperor, or something like that, I didn't realize that Marcus wrote the majority of meditations while he was at war, while he was facing the Antonine Plague, which basically wiped out a lot of people, which he actually eventually dies from in the end. But, so he's fighting multiple wars. He's fighting generals who are claiming to be emperor, even though he is. And there's a lot of stuff that he's going through. And so that just gives you a little bit more context to what Marcus was saying and why he said it. So I write, Marcus was sick, and so were many Romans later in Marcus's reign as emperor. They faced the Antonine Plague, which he later dies from. We know he reminded himself the ideas like, number 1, not to complain, and number 2, to act with, quote, justice, generosity, self-control, sanity, prudence, honesty, humility, straightforwardness, end quote. Because, like you said, being sick can't stop you from acting in those manners. He later writes, quote, everything that happens is either endurable or not. If it's endurable, then endure it. Stop complaining. If it's unendurable, then stop complaining. Your destruction will mean its end as well. Just remember, you can endure anything your mind can make endurable by treating it as in your best interest to do so, in your interest or in your nature. And again, he later writes, here's the rule to remember in the future when anything tempts you to be bitter. Not, this is a misfortune, but to bear this worthily is good fortune. Which means what? It is good fortune to bear being sick or to losing part of your vision. This is my favorite part. This comes from Seneca. This is your chance to prove yourself. Remember what I shared the other day from Seneca? He said, quote, "No man is more unhappy than he who never faces adversity, for he is not permitted to prove himself." End quote. Going through sickness with resilience and mental strength will make you better. You will then be able to reference your experience later in life when harsher things occur. And that's it. So, of course, it's not fun being sick because you have low energy. You don't feel like doing shit. You have all the reason in the world to complain. I get it. I've been sick, a few times in my life. Not a lot, but, as a kid, I probably was sick a few times. So I get that. Not having half my vision in my left eye, that fucked up a few things for me to do. I didn't want to go outside because the sun was bright, as per usual, but even brighter when your vision's fucked up and you got medication in your eye. It's amplified. So it's like, okay, well, what can I do then? I can still view the charts. I can still read some pages of these books. I can still do things, and that's what I'm here to focus on. Whatever is within my control, that's what I'm focused on. Not everything else. Oh man, I can't go outside and get exercise, whatever. It's like, well, you could walk up and down the stairs. You could lift weights. You could do something, right? Like there's still something within your control. So, now that I've done that, and now that whoever asked that question the other day, now that you're probably not sick anymore, I'm assuming, but moving forward, now there's no excuse. You go, well, I did it when I was sick, so now I can do it even more so. So hopefully that helps you guys a little bit more go through adversity with some resilience, with a better mindset. And that is what I'm going to leave you with for this weekend. So y'all be blessed. Have an amazing rest of your day. Have an amazing weekend. I'll see you here, same time, same place on Monday, April the 8th. And I did not have a outro song ready to go.